Hello, accounting superstars. This is Professor Don Bush from the Accounting Superstar YouTube channel. I've been a professor for about 30 years, CPA for about that long, and I've got great ways to explain accounting. So welcome aboard. Today's lesson is designed for students in their first accounting class, probably towards the end of their accounting class, and studying fixed assets. And what I've got here is I've got an example of an item that students really get confused on, and it's not very hard at all. It's really easy. And I also have really elaborated on this example too. So there's many little examples. It covers pretty much everything you could cover. So what it is Fred's Snowblower Service is expanding business. So what we need to do is we need to figure out, well, what is it? Is it a fixed asset that he's buying? How is he expanding his business? Well, it turns out the Fred here is buying land, and he's going to have some land improvements, and he's getting a building and new equipment. But then there are some other things too that are a little kind of like miscellaneous. I've got pictures right here of what's going on, land and land improvements and buildings and equipment and other things. So what we'll do is we'll take it as it comes here. So allocating payments and receipts to fixed assets. So these are things that Fred has done, and Fred is wondering, well, what category should I put him in? So what I'm going to do, I'm going to split the screen right away. Here we go. View split. There we are. All right. So the first thing that happens here with Fred is Fred is having a land inspection. Fred is considering buying land, and he's got to pay an inspector to come out to the land and look it over, whatever, and it costs $750. So all costs that get an asset ready for use, that's what we want to include. Now, we don't want to include things like normal maintenance or normal repairs, but anything that gets this asset ready to use, shipping that asset to our location, and also the cost of the asset itself too, and also the cost of setting up the asset. So you'll see how it goes here. So land inspection. This is in the process of buying a potential piece of land. So what we're going to do is we're going to put that under the land account here, because Fred eventually does buy the land. So we'll include that right there. Land survey, same thing. You need to have the property surveyed, and it's $1,200, and that's part of the cost of buying the land. So we'll put that right there. Attorney performed a title search on the land. Very important. And that's part of the cost of buying land. And here's the purchase price of the land. So you can see this purchase price, it's ending up being a little bit more than $120,000. That typically happens quite often. So real estate agent fee to purchase the land, can't forget that. Real estate agents are important. Now, here's what's going on here. Construction company bulldozed the land. So maybe the land needed to be flattened out. Maybe there were some dips in the land where there was water collecting. And so this is part of the cost of getting the land ready for use. So we'll put it right here into the land, $3,000. Now, a tree company to cut timber on the land, that's going to go right here on the land also. We're still getting this property ready for use. Maybe there was a lot of overgrowth and that kind of thing. Now, borrowed cash to build a building. Now, all what Fred did was borrow money. He's not building the building quite yet. So what this is going to be other. We're going to put it over here, other. And this would be a note payable. So I'll make a note here. Note payable. There we go. Now, there was an old shed on the land. And this old shed was not going to be used at all. In fact, there was never any intent to use this old shed. It was dilapidated, falling apart. So this old shed was raised, and that term raised means it was torn down. It was just flattened and taken to a landfill. Now this costs money. Now this is still getting this land ready for use. So there we go. And old copper pipes salvaged from the old shed. Fred received $600 because copper is pretty valuable. It's going up in price. And so Fred was able to use these copper pipes and take them to a place that collects metals and processes them. And so that is going to reduce the cost of the land, all right? Because money's coming in for this. Fee to electric company to connect power to the land, and that can be really expensive. And that's part of the cost of getting this land ready. So far, it's pretty much all been in the land category. Architect, engineering for new building. Very important. So what we'll do is we'll put this in the building category because Fred is going to build a brand new building on this land. Purchase building permits. Well, that's part of the cost of the building. Backhoe digging building foundation. So they're digging out the dirt, making a foundation. Part of the cost of the building. Cement crew pouring the building foundation. Well, that's part of the cost of the building. And city building inspection fees, $100. So the city inspector's got to come out. Lawsuit, locals protesting the building. Maybe they think it's too high or too big or something, or for whatever reason they're protesting. And so Fred had to hire a lawyer and maybe go to court or something. Now, we're not going to include this as part of the cost of the land or the building because this is kind of an odd thing. It's something that you wouldn't think happens very often. But I'll make a note right here. Lawsuit. There we go. Oh, and here's another thing. Vandalism at the construction site for $10,000. And that'll set Fred behind. But what we're going to do is we're going to put that right over here. And let me get the right color. There we go. And what we'll do is we'll probably enter this as some sort of a loss. And a loss is kind of a cousin to an expense. It's not really an expense because an expense is a cost of doing your job, doing what you're supposed to be doing. And Fred is supposed to sell snowblowers. And the fact that he had to clean up this job site, make repairs, maybe clean up graffiti, who knows what, that's not a cost of his job. So we'll call it a loss, but it's money going out. Now, building framing and rough-in for the building, here we go. City inspection fees, there's another $100. The building needs to be inspected periodically as it's being built. Hurricane damage to the construction site. Now, we'll put this also as a loss. Where Fred lives, that doesn't happen very often. I mean, Fred sells snowblowers. So we'll put that as a loss. All right. If it was something very common, we'd probably enter it as something else. But since it's not common, we'll put it as a loss. Interest on building loan during construction. Now, during construction, it's part of the cost of the building. And once construction has finished and the building is done, then this financing cost, well, this interest cost will be a financing cost. So, but for now, we'll include it as part of the cost of the building. Paved a new driveway and parking lot. Now, folks, this is going to be land improvements. Now, land improvements, these are items that will obviously improve the land, but they're things that will wear out, like sidewalks or a driveway or a parking lot. Paint on the parking lot. And you can see these lampposts up here. Those are land improvements. So anything that's going to last a while, like over a year or more, that's going to wear out or need to be repaired, replaced, that is a land improvement. Poured sidewalk cements or poured cement sidewalks for $2,000. Well, that would be a land improvement because that's outside. It's attached to the land, and it'll wear out after a while. Planted permanent shrubbery. Now, this is not, something that's going to wear out. This is permanent. And so we'll include that. We will include that as part of the land. Built a security fence. That's a land improvement. The reason why is it's attached to the land, and it's going to wear out someday. Security fences don't last forever. No fences last forever. Installed outdoor light poles and lights, probably like the ones right up here. $5,200. That's attached to the land, and they're going to wear out after a while. They'll have to be replaced someday or repaired. Worker injured. So a worker was injured somehow at this construction site. So what we'll do is we'll put it clear over here at the end. And again, we'll call it a loss because this is something kind of unusual. Hopefully it's unusual. So if it isn't, boy, that's not a good thing. All right, so completed building construction. So $200,000 to complete that building construction. Final city inspection for the building. So we'll put that under the building category. Now, insurance proceeds due to storm damage. So that relates to the hurricane, wherever it was. So what we'll do is that's money coming in. And what we'll do is we'll put it right over here. And we'll put it like maybe other revenue. How's that for right now? Other revenue or other receipts. There might be other ways to categorize this. But it is money coming in, but it certainly isn't from Fred doing his job. So we can't call it like plain old revenue. Maybe other revenue possibly. So other receipts, who knows. Purchased large power tools for shop. Well, that is going in the equipment category. Delivery charge for the shop power tools. You know, when you buy stuff like over the internet or whatever, and it has to be shipped in, oftentimes there's shipping costs. Well, that's part of the cost of the equipment in this case. Damaged equipment during the setup. Maybe somebody dropped the equipment, or maybe they installed it wrong and they wrecked a part of the machine. and this is, again, a loss. This is not something that's normal. So we'll put this as a loss right here. So now what we would do is we would get the grand totals so the grand total for land is $150,350. The total for land improvements, $29,800. Building, let's see what we got. $274,650. Equipment, $35,000, and other miscellaneous type items. There we go, $279. So the moral of the story here is that assets, fixed assets. So what are they? Fixed assets are things that are going to last a long time, like over a year at least, and things that are going to provide benefit to the business. And it's easy to think of examples like, say, a delivery truck or computers or furniture or equipment. In this case, land, a building, and land improvements. And by the way, once again, land improvements, those are items that are attached to the land and but wear out. You know, they'll have to be repaired and maybe replaced someday. So there we go, folks. That is it. So so that land turned out to be a lot higher than what the original purchase price was. So the original purchase price was $120, and look at this. When you add it all up together, $150,350, and usually that's the case when you buy fixed assets. So folks, there were a lot of great examples. So if I went a little too fast, let me know, and rewind, watch it again. Hey, and by the way, I've got a webpage called accountingsuperstars.com, and this webpage has all these accounting videos listed out by topic. So if you're having a hard time finding what you want, go to that webpage, accountingsuperstars.com, and hit that subscribe button and the like button, because it really helps me out with this channel. And besides that, it's fun to see, you know, people subscribe. So thanks a lot, and over and out.